Hello all, hope you're doing good. Happy New Year. So today's video is about two latest news related to IDFC First Bank. So let's quickly start. So the first update is related to this legacy high cost borrowings. As I had showed you in the earlier video as well, so IDFC First Bank had borrowed a lot of infra related bonds which were actually issued before this merger of Capital First and IDFC Bank. So even today, as you can see here, this much is the pending bonds which are actually having an average interest rate of 8.92%. So currently, even if if the bank issues the FD, if they raise the money by giving FD to the consumers, customers, so the rate of interest is only 7.2 or something like that. So you can see here it is 7.2, it's 8.92. It's already it's high cost. So that's why what bank is doing is actually they are selling off or this buyback these bonds by whatever the money the extra liquidity what they have got by raising FD. So as I showed you in the earlier deposit slides, so it has got a lot of deposits by FD as well as in term deposits and all. It has got already too much of cash with it, so it can either use it to lend it to the other customers like home loan and other things, and also it can use this one to reduce the uh, cost of these high rate bonds. So regarding this, I would just like to show you the latest some of the uh, announcement what has been done by corporate disclosures what has been given by IDFC First Bank in the NSE website. As you can see, there are multiple buybacks which are happening by IDFC First Bank. That means whatever the bonds they had issued earlier with the high rate of interest, even though they are not yet matured, so they have been already kind of bought back. So if I quickly check one of the link here, you can see here on 28th, this is actually maturing on this date. So they are already actually buying back. As you can see, they have actually bought it back. Similarly, I can also show you one more which has come actually on the 1st of January. Yeah, as you can see, they are actually redeeming these kind of bonds. So this will definitely help the bank to reduce the cost of funds. So currently it's already kind of 5.25 or something the cost of funds. So if they're doing these kind of proactive buying of the high rate bonds, so then definitely it will either maintain the same rate or it also reduce the cost of funds. If the cost of fund is reduced, of course the NIM, net interest margin for the bank, will increase. So the net interest margin for IDFC First Bank is already kind of a very good position. It's already at 6.25%. These kind of small activities what bank is taking care proactively will further reduce the cost of funds. So this is one of the very good news related to the IDFC First Bank. And the second news what I would like to show you is also this is an update which is given by the IDFC First Bank under corporate disclosures. So this is, as you can see here, uh, this is also this is one of the approval which ICICI AMC as well as the life insurance company, they've got the approval from RBI regarding holding of 9.95% of the paid up share capital of IDFC First Bank. Just I'll quickly show you the document. So usually these AMCs as well as insurance companies, so they will keep on collecting the insurance policies, the premiums from the customers, and they will have a lot of cash. These kind of cash, I think they have to invest in some companies so that they can multiply their money. In case of any customers, something happens to life or something, from that they can pay back to the customer like that. So whatever they collect the premium and if they keep it in FD, I think it will not give good returns. That's why these companies will always be finding out the good companies to invest directly. So what does this mean is, so this ICICI Prudential AMC as well as the life insurance company has got very good, uh, liking, or they've got confidence on this IDFC First Bank, so that if the IDFC First Bank in the long run it will go up. That's why they have shown confidence and they applied for RBI approval to acquire 9.95% of the total shareholding. So as you can see, this is the approval what they got on December 28th. And so how does it help? So let me go to IDFC Limited first, just to show you. I am in screener.com under the shareholding pattern. As you can see currently, uh, this is IDFC Limited. IDFC Limited. Let me quickly also show you the IDFC First Bank as well. Okay, now it is opened. It's mistake. Okay, anyway, now it has come. Okay, if I go down to the shareholding pattern, so this is the promoter. This 37.51% is actually the holding of IDFC Limited. So that means they are the promoter as of now. Once the merger happens, so this 37.51% will go away. That means it will become like this: FIIs, DIIs, and the public holding will be there. So what will happen if everything is holding by distributed to all the publics? So there will be too much shares for trading. That will actually will cause maybe volatility in the share price. That's why once the merger is happening. So currently this is what the IDFC Limited shareholding. So IDFC Limited is also not held by any promoter group or family group or someone. It is also held by the FIIs and DIIs, as you can see here. Uh, so once the merger happens, so these FIIs and DIIs, these shares actually, whatever these are holding, they will get 1.55%. And then again, it will also become, a kind of, fully distributed. So that's why it will be too much of liquidity will be there. Now, I don't know whether IDFC First Bank proactively approached ICICI Bank to invest in IDFC First Bank, or ICICI Bank, saw the opportunity and they wanted to invest here. Because of that, they have taken the approval of RBI. It doesn't matter. I mean, it's always a good thing for IDFC First Bank holders, because if the major chunk of 10% of the shareholding is held by the big group like ICICI Bank, so they will not sell for 10%, 20% gains like that. Definitely, they will hold for long term and for uh, three bagger, four bagger kind of returns. I'm assuming, yeah. So and volatility will also reduce, because it's kind of blocked by them, and these shares will not be available in the market for selling. So that's why this is also very very good news. So there are, I mean, takeaway from this video is two takeaways. To reduce the cost of fund, I think IDFC First Bank is buying back the uh, high rate bonds, and second one is also ICICI Bank is going to invest. I don't know whether they will invest before the merger or after the merger. They can also have an option, after the merger, these many FIIs and DIIs, they can also have an option to sell, to the ICICI Bank, ICICI AMC and life insurance. Yeah, that's it for today. As always, please like, subscribe, and also support. Yeah, thanks. Bye.